Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone. Our email address is thebiz@brokersalliance.com, and you can call us 1-800-290-7226. Our extension for 147, and that's for all our quotes and any support material you need on life insurance, DI, LTC, annuities, and group pension. And remember, I'm not a tax or legal advisor. Before going forward with anything here on this show, always consult your CPA and your attorney. And if you're with a broker-dealer, always touch base with your compliance officer before moving forward with anything we're doing. Well, today, my guest from Opulent Capital is Clark Hogan. Clark, welcome to our show.
Nice to see you again.
Nice to see you again. And we're talking about, I love controversy because this is one of those, it shouldn't be controversial, but it kind of is. We're talking about life settlements. And after all that has went down in the last 3 to 4 years, most of the industry and most of our agents and our producers and people watching our show pretty much thought that this area is just dead. Mm-hmm. But you were telling me, and the last time I saw you when you were back here visiting us, that something significant happened in the late 2010. And now all of a sudden, out of nowhere, life settlements, although it has been consistent for you, right, because you guys are so much involved in this, but I really was taken back by how this is coming back in a big way, and we need to reintroduce this into our practice.
That's right.
So talk a little bit about what happened back in 2010 to change the map, because I heard regulation's going to take it out. Yep. We're not getting paid like we used to. The client's not getting the offers that they used to get offered. And the whole market, nobody's dying, have no death claims, So what happened?
The whole problem, Steve, was money available to purchase policies, first and foremost, and that created no transactions. I would say over 365 days, we have increased our business production by about 700%. And that's solely due to the fact that there are new buyers coming into the market. Since the last time we spoke, which was
a couple
months, since January, we've seen an increase in buyers that are purchasing policies by about 62%.
Now, is this individual purchaser or institutional?
Well, institutional buyers, which are large banks, hedge funds, et cetera, purchasing individual policies off of individual clients who are either overinsured or just can't afford their policies any longer.
And Opulent Capital acts as that middleman.
That's right. We're a market maker. What we do is we try and negotiate the highest lump sum sale price for that policy.
And of course, that's what you're doing for us with Brokers Alliance now.
That's
you're
right.
Kind of acting as our intermediary as we're now dipping our toe back into the market. Hopefully we're not too late.
No, we want you to dive back in. I mean, I think what the primary difference, even in the past 6 months, are that institutional buyers and banks realize or recognize that this is an opportunity to improve the lives of a financially distressed or overinsured individual, while at the same time improving returns to their investors. So,
when I think about life settlements as a huge rescue plan for a lot of seniors, I mean, so many things change.
Yep.
And after taking some of the hits that we took in the market and other financial issues of real estate,
yep,
I've noticed that our net worth isn't what it used to be. So
That's
maybe
right.
our tax burden on an estate transfer isn't as big. Perhaps things have changed at home, or I need liquidity myself. So this is a huge rescue plan, almost
That's right.
a white knight coming to the rescue of a client.
In many cases, it can be. The reasons for insurance always change. And most people perceive life insurance to be just like any other insurance policy. And we've been trained to dispose of insurance that we don't need. Just like when you buy a new car and you sell your old car, or you change jobs and you get rid of a health insurance policy. A life insurance policy is just a little bit different in that you have different options to get rid of that policy. You can renegotiate the face amount, decrease it or increase it as relevant. You can cancel the policy, which the insurance company will give you what's called the surrender value of that policy, typically a fraction of the premiums you've paid in, or you can opt for this settlement agreement where we will find a buyer for that policy that will purchase that policy always for an amount that's substantially greater than
The
that
surrender
which
cash value.
the cash value of that policy.
Well, when I think about doing a life settlement now, I'm thinking, how do I re-engage? I'm a producer. I've been watching our shows. We try to keep them on the edge of what's happening, and our producers are sitting there saying, "Okay, I hear what you're saying.
Sure.
I thought this was pretty much dead in the water. Now you're saying we're re-engaging again, and the market has cycles, and we're just at the front end of I think you think a big one.
That's right.
So, what is our necessary? Let's say if we're looking for. What are we looking for when we prospect? What's our marketeering about?
Yeah, well, I like lowest common denominator and keep it simple, right? So 62 and older for term policies, 70 and older for perm policies,
Well, let's just
or
stop
non-term
you there because
policies.
I think people are fascinated.
Yeah, they probably-
I get permanent insurance. I get that. But now we're talking about term insurance.
That's right.
Talk a little bit about how does that become a play? And it's a big play.
It's a huge play. I mean, if you think about it, the notion or the mantra has always been term insurance policy is just there for a temporary period of time. Once you're done with it, you cancel it, you throw away, you get nothing back. And here's an opportunity by which we can actually convert that policy into a lump sum cash settlement.
So it has to have convertibility first.
Has to have convertibility.
In the policy. Right?
Has to have convertibility, so it's typically up to 80% of that term, depending on the rules of that specific policy.
So if he has a 10 or a 20-year term, about somewhere between 15 and 17 years on a 20-year term, where they're going to give you that right to convert
Each
it.
policy and each carrier is different, but the rule still applies.
Okay, so let's say I have a term policy that I can convert today. And I really am not going to need it. It was good for this temporary time that I had an exposure to liability, and I'm willing, and I'm probably going to dump it like most people do. How do I play term and make this a cash cow?
Exactly. So, and this is a great option for producers who want to seek a policy replacement strategy. So what we do is we'll settle the old policy, and convert that into a lump sum cash distribution.
So you've already bought the term contract first.
Correct, or we can do the two side by side,
and
the two
conversion
transactions.
then takes place?
Correct. So what we'll do is we'll purchase the policy, or one of our buyers will purchase the policy and handle the terms of the conversion into a UL policy. The individual insured or the policy owner does not have to come out of pocket for conversion premium or any of the costs of converting that policy into a UL policy. So all they have to be concerned with is the lump sum sale price, what they're selling the policy for and what they'll receive. At the same time, the producer can go through and underwrite a new policy replacing that first policy that we'd converted in cash for the client.
Well, this sounds like a huge gift, to the client. Most people, even the public, gets this. Term insurance has no cash value.
Yeah.
The best it can ever do is maybe have an ROP rider on it or return a premium rider, but basically no cash. Now we're saying, well, before you go ahead and set aside that term contract, and if you truly don't need it, and you want to turn this into cash, here's an option, and I think this is unreal leverage. This is economic leverage.
You can be a financial hero to your agent or to your client. Absolutely.
Now, on permanent, and which I actually get, I get that part of it. When I'm looking at permanent insurance, do we X out any format, like is variable in play?
The market has expanded so quickly in the past 6 months that all these policies that we thought were not sellable a year ago have now found homes.
Even VUL?
VUL policies, whole life policies, universal life policies. If we're talking about business insurance, key man policies covering executive staff members of companies, all these policies provided the mechanics of the transaction work out, we can absolutely settle those.
So, and when I'm looking at contracts like VUL, which traditionally have been kind of not really a great mortality chassis to use for life settlements, now that's kind of back in the game. And indexing the same way, index UL, have you seen any of this action yet?
Right, yeah.
Because it's still relatively a new technology. I'm thinking that if a client needs have changed, they need cash, right? And we have an opportunity to go through our inventory. I'm looking at all my term that I've ever written as a producer for 62 and older, and I'm looking at 70 and older for any of my perm transactions. Now, I'm assuming is second to die off the table?
We just did a second to die 3 weeks ago. where, you know, as long as the mechanics of the transaction work out and the age of the two primary insureds are correct, and we can find a buyer for that.
Yeah, because I guess it was my understanding that second to die was kind of really not a good settlement issue because you had to wait till the second death. But now, depending upon the longevity, the LE projections, that could be a big play.
That's right.
So when I'm looking at second to die, VUL, traditional, maybe some whole life that wasn't on the table anymore, now we're putting this all on the table. It sounds like you're not Xing out anything on the life insurance side of this equation.
You know, each case, Steve, is absolutely unique. And that's why I like to go back to the keep it simple thing. It's pretty much every policy type is now settlable in some way, shape, or form as long as it hits the minimum. And again, what I like to do is go back to that minimum of 62 and older for term, 70 and older for perm, and then bring us that case and we'll vet it out. My job is to tell you, the advisor, so that you can tell your client as quickly as possible the right strategy to take with that policy, whether you surrender it or we can convert it into cash.
Are there any other pre-qualifications? Because we're going to get into this in the second half on what you want and what we're going to give away today on the show. Some census, some data collection, things of that nature. But when I'm looking at this, I'm trying to think about, okay, I got my age groups now. I know I can have all my mortality chassis.
Sure.
I have that all online. When we come back from the break, I want to know, okay, now, are there any other pre-qualification before I start writing and filling in your census and your material? Okay.
Absolutely.
Well, listen, when we come back in the next segment, we're going to talk about this with Clark because this is a whole new re-emerging market, and we want you to be at the edge of the new curve that's coming on in life settlements. And I'm excited about it because I think this could really help not only all of our clients, but this could be a whole nother revenue stream for our agents. You're listening to The Business Insurance Zone. I'm Steve Savant. You can write us at thebiz@brokersalliance.com or visit our website at www.brokersalliance.com. We'll be right back after the break. Steve Savant here. For years, I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now starts new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.